Intermediate Accounting, Chapter 8A-B, Appendix A and B, Inventory. Chapter 8, Inventory. After studying Appendices 8A and 8B, you should be able to 12. Apply the retail method of estimating inventory. 13. Identify other primary sources of GAAP for inventory. Appendix 8A, Retail Inventory Method 1 of 6. Accounting for inventory in a retail operation presents several challenges. It is difficult to use specific identification for high-volume, low-cost products. It is difficult to determine the cost of each sale and to reflect declines in value of the merchandise. It is difficult to allocate costs such as transportation. An alternative is to estimate inventory costs by taking a physical inventory at retail prices. Periodic inventory counts are taken to capture lost or stolen items. Differences between the records and the physical count require an adjustment. Appendix 8A, Retail Inventory Method 2 of 6. The retail inventory method is based on the observable pattern between cost and selling price, cost to retail ratio. The retail inventory method requires the total cost and retail value of the goods purchased, the total cost and retail value of the goods available for sale, and the sales for the period. Sales are deducted from the retail value of the goods available for sale. The result is the ending inventory at retail value. Ending inventory at retail is converted to cost by using the cost to retail ratio. Appendix 8A, Retail Inventory Method 3 of 6. Example of the retail inventory method. Beginning inventory 14,000, purchases 63. Those are at cost. But using the retail price, beginning inventory would be 20 and purchases would be 90. Your sales are 85,000. Our beginning inventory is 20 at retail. Our purchases are 90. Our goods available for sale at retail are 110. We subtract our sales, and our ending inventory at retail is 25,000. The ratio of cost to retail is 77,000 divided by 110,000. That gives us 70%. So take the ending inventory at cost, 25,000 at 70% will give you the cost of 17,500. Appendix 8A, Retail Inventory Method 4 of 6. Approved under IFRS and ASPE and allowed by CRA. An advantage is that the inventory balance can be approximated without a physical count. Makes the method useful for interim reports. Used to estimate losses by insurance companies. Acts as a control device. Shows deviations from physical count. Speeds up physical inventory count at the end of the year. Use a scanner to record prices. Has an averaging effect for varying rates of gross profit. With advanced technology, there is less need for inventory estimations as many systems track costs, prices, and items like markups and markdowns. Appendix 8A, Retail Inventory Method. Example of retail inventory method using markups and markdowns. So the markups is 3,000, the markup cancellations are 1,000, the markdowns are 2,500, and the markdown cancellations are 2,000. So the cost of ending inventory for in-fashion stores is therefore 12,500 times 54.7%, which equals 6,837.5. So if you look at the retail inventory method, you will have the cost to retail ratio of the 20,500 divided by the 37,500, and that gives you the 54.7%. When calculating cost to retail ratios with net markups and markdowns, consideration must be given to the inventory valuation method used. For example, beginning inventory is not included in determining the ratio under FIFO. Appendix 8A, Retail Inventory Method 5 of 6. The retail inventory method becomes more complicated when such items as freight in, purchase returns and allowances, and purchase discounts are involved. Freight costs are treated as part of the purchase cost. Purchase returns are ordinarily considered a reduction of the cost price and retail price. Purchase allowances are considered a reduction of the purchase cost only. Purchase discounts are usually considered a reduction of the purchase cost only. Sales returns and allowances are treated as adjustments to gross sales. Appendix 8A, Retail Inventory Method 6 of 6. Other special items that require careful analysis. Transfers in are reported the same as purchases. Normal shortages, retail only, deducted from goods available for sale to determine ending inventory already built into the cost. Abnormal shortages, deducted for both costs and retail before calculating the cost to retail percentage. Employee discounts, deducted from retail goods available for sale, should not be included in calculating the cost to retail percentage. Appendix 8B, Accounting Guidance for Specific Inventory 1 of 2. Forms of inventory. Most inventories apply a lower of cost and net realizable value model. ASPE, CPA Canada Handbook, Accounting Part 2, Section 3031 Inventories, and IFRS is IAS2 inventories. Excluded from Section 3031 and IAS2, but covered by other primary sources of GAAP, is financial instruments, the CPA Canada Handbook, Accounting Part 2, Section 3856 Financial Instruments, and IAS 32 Financial Instruments Presentation, and IFRS 9 Financial Instruments. Biological assets related to agricultural activity and agricultural produce at the point of harvest. ASPE, see below, and IFRS IAS 41 Agriculture. Appendix 8B, Accounting Guidance for Specific Inventory 2 of 2, Form of Inventory. Industry-specific exclusions from only the measurement provisions of Section 3031 and IAS 2. Disclosure requirements still apply. Inventory held by producers of agricultural and forest products, agricultural produce after harvest, and mineral products. ASPE excluded from the measurement provision of Section 3031 if measured at net realizable value in accordance with established industry practice. Otherwise, apply Section 3031. Exclude from the measurement provisions of IAS 2 if measured at net realizable value in accordance with established industry practice. Otherwise, apply IAS 2. Inventory held by commodity broker traders. Excluded from the measurement provisions of Section 3031 if measured at fair value less cost to sell. Otherwise, apply Section 3031. Excluded from the measurement provisions of IAS 2 if measured at fair value less cost to sell. Otherwise, apply IAS 2. Biological assets and harvested agricultural produce. Excluded from the measurement provisions of Section 3031, not covered by any specific primary source of GAAP. See above. The end.